Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind, these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are on Monday, January 17th. We're going to take a look at Owlet. Owlet was requested, and I figured we'd take a look at it before the week kicked off just to see what we might decipher from the current chart, and it is a brutal one. So here on the daily, you see it spent a long time up here in the $10, $11 range, and then today, after all of this activity, is sitting in the $2 range, the low $2 range. So a couple of things stand out to me here on the daily. So put in a few trend lines. So one is this downtrend support line, this previous range that it built after it followed this down. And it's sort of just following a parallel movement at the moment, ever since it had its most recent drawdown. And so what I'd look for it to do, because it does have a decent history of doing this, meaning decent, not good, but repetitive, it builds a relatively long consolidation in a range, and then it makes a big move in a direction. And that direction so far has been down. Someday maybe it won't be down, I don't know. But you see it doing it time and time again here, and I'll just highlight these just to point them out, but also highlight them so, if you're building yourself a chart in the future and it's back up into these ranges, I would, watch for there to be some friction around these zones, because there was a lot of price activity, there's a lot of building of price within these ranges before it made a next big move, which then creates, to this period of time, a bunch of bag holders in the process, right? Just has consolidated price and basically brought in some folks during those periods, of course, through the buying and selling, and then plummets and leaves some bag holders. What you may see, if it's able to turn things around, is it building in a range and then starting to move upward, thus having some folks who decided to come in during recent consolidation periods for the first time, bringing them in as profitable shareholders, which at this point there can't be that many in Owlet. It's called the OWLT. But yet, to me, I would look for it to follow this similar structure. You see, it recently did this and broke out of this range about the 10th of January or so, and so about last Monday, and then continued to draw down further. So, I would look for it to build another range. It's not doing that at the moment. It's still kind of coming down, but build another range over several days, ideally several weeks, and then make a move from that range. Now, the advantage to watching it build a range and then watching it move out of the range is that you will at least then have a likely indication of where the stock price is going. That, of course, doesn't mean that it's going to go up. It just means that if you don't want to get trapped, you can watch a stock as it consolidates, don't enter while it consolidates, and then when it makes a movement to the downside, if you want to go short on the stock, you could do that. If it makes a movement to the upside and shows sustained strength over that, especially for a stock that has drawn down so significantly and been under such selling pressure for such a sustained period of time, making it prove it to you before you jump in, that could be a wise decision on anyone's part. So, I would just take any of these ranges, and a lot of them are probably going to align with pretty psychological levels. $3, $3.50. There's probably something here. Yeah, this bottom bound is about the $2.50 level, right? So, these will probably mostly take the shape of relatively round psychological levels on the dollar, on the 50 cents, that will just sort of like trigger the overall investor pool in Owlet to think, do I want to hold this through $3? Do I want to buy into the stock over $3? And same question for $5.50, same question for $8, so on and so forth. And similarly, to what pressure there's going to be to the downside, the extent to which folks who may be holding bags from $10, $11, $6, $3 even, the extent to which they are just very willing to offload those at some point. Those could certainly align with some psychological levels as well, right? Like, I'm willing to hold this to $2. I'm not saying that's a smart thing to do, but so those round numbers after such a crazy sell-off in a stock, will probably align more strongly than most things. But to me, that's what I would look like. Now, if we want to draw in some downtrend resistance as well, there's certainly no shortage of that. Here are some resistance levels that, like, even once it breaks a range, making it prove that it's going to turn things around by forcing it to break through some of these downtrend resistance levels and move away from it, I think is probably another wise way to maneuver some of these things. And this is all just because I think sometimes people take for granted how possible or how plausible or how quickly a stock can reverse trend, like truly reverse trend. It's a very hard thing to do, especially when a stock has spent a long time and has been through a very painful drawdown like this. Tens and dozens and dozens of percentage, losses. And so making it work its way through these previous resistance levels and show clear strength through them, isn't necessarily a stupid way to play these things. There's plenty of stupid ways to play these things, of course, but I wouldn't say that would be one of them. So, we could draw these in all day, and you may want to just take a look at the chart and sort of do them for yourself and see, what might make sense to you if you're really interested in the stock, or you really like the company and you would like to be in it. But it's got a lot to prove, in my opinion. The one thing that I was going to warn against is, just because it breaks a resistance level may not mean anything. Meaning, well, okay, so we could take this for example. So let's say that we had drawn this in before these candles, erupted. It came through, put this in, okay, we draw in some resistance levels, and maybe this draws back to here, for example, and so we already had that in. And then we see this first candle kind of breaching that level. If you were to buy in right then, not waiting for a second candle confirmation or even like further follow-on candles to confirm that breakout is happening, because it's been in such a crazy downturn, you would have just gotten trapped like anyone else would have gotten trapped, right? Because oftentimes these can try to break a resistance level and then either just fall back into it, which is what you see here, or try to break it and then just end up losing value just outside of the previous resistance level, but following it down almost like downtrend support at that point, which is, to the bag holder or to the stockholder, that's just as infuriating of a situation as if you were just trapped under here holding it, right? You're only a few probably pennies away from where you would be anyway if you were just trapped underneath this, never having faked, a certain number of people out by trying to break that downtrend resistance. So, I don't necessarily have any good news. I feel like I have probably pretty practical news. And I really think that it's wait for it to build a range, wait for it to break that range, throw in some resistance trend lines that you see, or some resistance levels that you see, and wait for it to start to really prove itself. Another thing would be to obviously pull in some EMAs, some MAs, and wait for it to prove itself there. These EMAs, the 12, 34, and 50, are in a fully bearish formation, obviously, and it has a long way to go just to get to that 12 EMA, for example, right? 20 plus cents. So probably more than 10% it would have to move in order to just get itself to that. And even then, that's not saying it's going to overtake that 12 EMA. Then it has to maneuver above it. And then, you can look for some of these EMAs that start to cross over and then get in some bullish formation. Then you might be talking about something that has the capacity and the capability to wrangle itself into a trend reversal type situation. But as it currently stands, it's just in a rough situation. And I feel like we see a lot of these lately, and I feel like people may sort of like discount the idea that just because a stock is super low that it can't go lower, right? They get into that trap, and then they get into another trap of like just deciding that small changes in price or small movements or one break of a resistance level signifies a breakout, and they're trying to catch the falling knife, and so they just shoot themselves in the foot and get themselves in just a bad of a situation as anyone else because they jump in too early. So I know this is very soapboxy, but this just feels like I feel like I'm analyzing dozens of these charts these days where just stocks have lost, at least 50%, and this is much, much more, right? And folks are just kind of jumping in because they're low, jumping in because one resistance level was broken, and I'd really consider the EMAs or the MAs, whatever your system is, and look for it to make some movement around those. All right, folks, I gotta cut this soapbox off, or it'll just go on forever. I don't know the degree to which that was helpful, but that's my take on OWLT at the moment. All right, folks, I hope that your trading week gets off to a good start tomorrow, and that your trading week goes well for the remainder of it, and I appreciate you watching. I will see you in the next video.